Whispers of a bear market come hand in hand with an unsettled economy. Is it time to flip the switch and start investing in bear mode? Hold on to your seatbelts, folks. This is going to be a good one. The idea of a bear market often pops up when the economy, as well as investments, are experiencing a good old bout of uncertainty. Thanks to Trump and his tariffs, that is a huge check on the uncertainty for sure. However, uncertainty does not make a bear market. It can certainly help the bears take over, but in the purest sense, it is not what defines a bear market. In simple terms, a bear market is when the value of a market index like our TSX drops 20% or more from its recent high, and this is typically over a sustained period. On January 30th, the TSX topped at $25,875. So for a bear market to happen, we need to drop more than 20% from that value. In other words, the TSX needs to drop below 20,700 to enter a bear market. Currently, at the time of recording, the TSX is sitting at 24,605, which means we're only down 4.91% from that top. That is not even close to bear territory. Of course, we did have a major drop in early April. It went down as far as 22,859. Which, it's only 11.66%. That is more than halfway to a bear market, but alas, it's not a bear market. One question I do get asked quite a bit is when I plan to throw that switch and stop adding to my cash position and, start buying those discounted stocks. The answer to that, it's pretty simple. I plan to throw the switch and move from padding the cash position to dollar cost averaging the bear market when we actually move into the bear market. So I need to see the TSX below 20,700 before I'm going to switch gears. So for the time being, I will still be adding monthly to that cash position in addition to my regular purchases. However, with that being said, I do plan to continue increasing the percentage of how much of the monthly budget is going into that cash position for sure. A sub to the channel is the best way to increase your position in future content. Okay, without any further ado, let's get into the challenge portfolio. We will start as we usually do with the stocks that we have not added to in this cycle. So we've got Bird Construction sitting at 6.98% total return. Bank of Nova Scotia, Scotiabank, 22.52%. CNR, Canadian National Railway, they are still down 8.02% in the portfolio. Diversified Royalty Corp, they're sitting nice, 13.27%. EBIT just a little bit above the water at 1.21%. Good old Canoe sitting strong, 26.60% total return thus far. They were number one last month. Can they hold on to that position this month? We're going to find out. Extendicare coming in 18.56%. Not too shabby. And look at Fortis up there at 27.12%. I guess the suspense on whether Canoe can hold on to that position was just it's gone. We know that Fortis beat them. We also have HHIS, and they are a little bit in the negative 0.44% for that ETF. Hammond Manufacturing also in the negative 5.50%. Pizza. They're finally looking pretty good, 12.22%. We have RioCan just a little bit into the negative 0.21%. RMAX just a little above the water, 0.30%. And Timber Creek Financial, they're actually in the green right now, a 1.78%. I know there's been a little bit of talk about, am I going to sell them? I'm not sure. I really do like Timber Creek Financial, so it's something I will definitely ponder in the next month. Up next, we have TransAlta sitting at negative 1.74%. And we also have XEG, our iShares ETF, sitting at negative 8.03%. But those, both TA and XEG, they can change very quickly if we get, if we were to get a little bit of a pump in oil prices. Okay, let's switch gears and take a look at the stocks we have added to this time around. So of course, we got Air Canada. We did add another 10 shares, taking our total up to 60. They are sitting at a negative 6.49% on the total return. This this is the active swing trade, so we will continue to add each month, provided they remain under $17, and that could be a long time. It could be a long time, but we're in it for the long haul on this one. Up next, we have Bell. We did add one more up to 16. They're currently sitting at negative 17.51%. And this one is definitely painful for sure. Up next, we have Canadian Natural Resources. We did add two more, taking them up to 19. Currently, they are sitting at negative 7%. Once again, this one here is tied into the price of oil. We just need to see oil pick up a wee bit, and this will be back into the green in no time. Up next, we have JEPQ, which is my tech ETF. We did add one more share, taking us up to 13, currently sitting at negative 7.44%. A new one from last month, PPLN, we did add another 5, and that positions up to 9.17%. I love those pipelines. I love pipelines. Looking at our cash position, we did add 6 more shares to TCSH for a total of 21 shares. They are currently sitting at 1.62% when it comes to total return. And that's a number that will keep on creeping up because, Tcash pays out a half decent dividend. Finally, we added 6 more shares of that iShares utility ETF, so XUT. Takes our total up to 35. They have a total return currently of 6.26%. All right, let's take a look at our rebalance. We did sell out of 2 positions this month. So we did sell out of QQCL. We sold 30 shares for a profit, a total profit of $53.20. We also sold out of BlackBerry 20 shares for a profit of $71.20. I could see the writing on the wall with BlackBerry. I still like BlackBerry, but that giant pump they had towards the beginning of the month, it wasn't going to last, and I think I pulled the trigger. I think I pulled the trigger at the right time on this one. So those funds, of course, helped fund some of the restructuring that went on in the portfolio this month. Speaking of restructuring, we did have 2 new positions that were added to the challenge. First up, London Gold. We purchased 10 shares at $40.88. And this one's crazy. It already has a total return of 36.30%. So that's not too shabby at all. We also jumped into the brand new Solana ETF from Purpose, SOLL. We picked up 6 shares at $9.80. Currently, they are up 0.50%. They went up quite a ways, actually, and then they came back down, but we'll see what happens. I do like Solana. I like Solana a lot. Okay, now that we've got all of that housekeeping done, let's take a quick look at the overall portfolio. April was a very volatile month on the market with a few major buy the dip opportunities for sure. Looking at the numbers, we did add another 500, taking our investments up to 11,000. The community added another $27 for a total of 1,001 thus far. A huge thank you to the community, of course. When all is said and done, that added up to a $12,001 investment in the challenge. We also received $79.85 in dividends for a total of $809.01 to date. When we add in the dividends and the growth, we get a portfolio value of $13,454.45. We did get a small rebound in the challenge as our total return moved back up a little bit to 12.11%. With the uncertainty in the economy, I do expect to see this number come down as we move into eventually into a bear market. Let's take a quick look at the portfolio's diversification with data pulled from the Blossom app. Speaking of Blossom, if you want to check in on the challenge, I do have it uploaded there, and there's a link below to sign up for the app. According to Blossom, our top 7 represented sectors are, at the top, we've got industrials at 24.8%, energy 13.8%, utilities 12.7%, real estate 12.2%, and here's fixed income slowly climbing up 9%, financial sitting at 8.8%, and materials coming in at 5.2%. I do like these numbers, and as we move closer to a recession, you're going to see some of the more defensive sectors continue to inch up in that list. Okay, It is time to look at the toad and the goat of the portfolio for the last month. Our top 5 worst stocks this month are, well, at number 5, JEPQ down 7.74%. Tech has been hit hard by these tariffs, and well, this ETF is absolutely reflecting that. At number 4, we have Canadian Natural Resources negative 7.78% total return. Once again, oil is down. There's not much we can do. CNQ is one of these stocks that can be at the bottom, the top, or even in the middle. It really depends on what's going on with oil. At number 3, we have Canadian National Railway. They are still down 8.02%. Number 2, we have XEG negative 9.60%. All right, our toad of the month. No surprise. Number 1, once again, BCE negative 17.54%. What can I say? I have a feeling this is their spot. Until I sell them, this is their spot. Our top 5 best stocks this month are, well, at number 5, we have Extendicare 19.45%. Scotiabank 21.84%. Canoe EIT coming in at 26.60% to firmly take number 3. Number 2, Fortis 27.16%. And our goat of the month, this is funny, London Gold 36.79%. Holy banana bread. What can I say? They just absolutely did good. And when the market's in chaos, people turn to gold. People turn to gold, and that's why I added this stock. And so far, it's paying off for sure. Tune into the next update when we will do it all over again and see how the market is treating the challenge. I am excited for sure to see where we are going next and, well, to see if Canoe can get their title back from London Gold. If you are interested in any of the stocks we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Well, let's continue that learning journey. Check out this video on retirement income ETFs. Thank you for watching, and I will see you in the next video.